Hello everyone, we are a family office managing assets and funds. Today, let's analyze the recent performance of global stock markets, focusing on US stocks compared to A-shares and Hong Kong stocks. Recently, the Dow Jones and S&P 500 hit record highs, with the Dow surpassing 45,000 points. This year, the three major US indices performed well. The Dow rose 19.16%, Nasdaq increased 28.02%, and S&P 500 gained 26.47%. These figures are exciting, but what are the P/E ratios for these indices? The Dow's P/E ratio is about 33.89, Nasdaq's is higher at 44.87, and S&P 500's is 29.77. These figures highlight the high gains of US stocks and their elevated valuations. Now, let's examine the performance of A-shares and Hong Kong stocks. This year, the Shanghai Composite Index has risen 11.82%, the Shenzhen Component 11.41%, and the Chinex 17.59%. Hong Kong stocks saw the Hang Seng Index rise by 13.94% and the Hang Seng Tech Index by 15.65%. While lower than US stocks, these gains are still notable. This raises a question: why do US stocks keep rising more than A-shares and Hong Kong stocks when they're already at historical highs and valued about twice as much? The answer is not hard to find. First, the US stock market hosts top companies like Apple, Tesla, Coca-Cola, and Procter & Gamble, which earn profits globally. These quality companies have boosted the US market, especially the Big Seven, that significantly impact the index. Recently, Apple and Microsoft reached new highs, Nvidia became the most valued company, and Tesla also exceeded $1 trillion market cap. The Big Seven's impressive performances have advanced the US market index. Second, US companies value market cap management, using stock buybacks and dividends as common strategies. US companies prefer quarterly dividends, 4 times a year, compared to A-shares. This frequency boosts investor confidence and lifts stock prices. Long-term market cap strategies have led US firms to often set new historical highs. The US stock market is mature, prioritizing returns over financing and shareholder protection. If a company commits fraud, regulators will act, facing heavy penalties, while some firms choose premium privatization to protect shareholder rights through buybacks, benefiting them. The survival of the fittest mechanism in the US stock market is notable. While listing requirements are relaxed, delisting conditions are also lenient. Many companies voluntarily delist or are delisted for failure, with voluntary delistings being more prevalent. This mechanism focuses market resources on high-quality companies, sustaining long-term performance. Valuations in the US stock market are high, generally over 30 times, while those for A-shares and Hong Kong shares are about half. If US stock valuations slow while A-shares and Hong Kong stocks increase, the latter may have greater upside. The valuation edge of A-shares and Hong Kong stocks is their key competitive advantage in attracting capital. However, A-shares and Hong Kong stocks face challenges. The A-share market has long prioritized financing over returns. Although there has been some improvement, the 400+ listed companies lead to significant financing needs, straining capital. Despite the average daily trading volume of 20 to 30 trillion, significant selling pressure has limited price increase potential. The policy environment and external factors significantly impact A-shares. Domestic institutional investors often engage in swing trading, reducing holdings when the index exceeds 3,500 points and increasing them again below 3,000 points, which hinders the market's breakout from its long-term range. If the market changes this habitual thinking and reduces focus on the 3,500 point ceiling, A-share valuations could rise from 15 times to 20 times or more, leading to greater potential. In summary, despite high valuations, US stocks are strong due to quality companies, mature market mechanisms, and sound capital management. A-shares and Hong Kong stocks must improve investor confidence and profitability. Once resolved, their performance is likely to shine brighter. That's it for today's sharing. Thank you for listening.